So we're looking, the quarter's ending. We're looking at the second worst quarter ever, at least if that happens, the same numbers as yesterday. The S&P's down 18% for the quarter, and a lot of people very eager to get out of the quarter. There's a lot of hopes for pension rebalancing. This is notoriously difficult to get your hands around, but I've seen some enormous numbers, $139 billion. And when you see how some of these treasuries have done this year compared to everything else, it's not a surprise. People think there's going to be some significant numbers moving around. Early on, a couple things up. Energy's up and transports are up. David mentioned it because the airlines are up today. Tech is down, but not as much as the rest of the market. Banks still down today, and they really did not participate in yesterday's rally. That was a little disconcerting. A lot of the regional banks were actually down on the day. Even J.P. Morgan eked out only a very small gain. Guidance, we're used to companies withdrawing guidance, but some odd ones today. The guys mentioned Domino's. That's a little odd withdrawing their guidance. But McCormick, too, MKC, talking about uncertainties due to the coronavirus outbreak here. That's a spice company. A little odd. No surprise, Restoration Hardware, RH, they withdrew their guidance. But then Conagra said their guidance was going to be better than expected. So a little bit of good news there. And then the some things never change category, British Tobacco, not seeing any major impact on their business due to coronavirus. Not seeing any major impact at all from British Tobacco there. So we're in the final day of the quarter, as I mentioned before. You want to just see the market internals change. Things calmed down a little bit yesterday, a little better today. So we had the lightest volume on the NYSE since March 5th yesterday. The VIX was the lowest since March 11th. The intraday swings were like 4.5%. That's ridiculously big still, but it's better than 6, 7, 8% we saw in the last few weeks. Today, it's about a 60-point swing in the S&P from high to low so far. That's better than 100, so quieting down a little bit here. The quarter to date here, down 18%. And here's you have the hopes for the rebalancing. When the S&P is down 18% and long-dated treasuries are up 22%, that's called rebalancing, folks. And that's why people are hopeful that might help out a little bit here. If you look at the corporates, they're basically flat. A lot of buying in LQD because the Fed's going to be buying corporate treasury ETFs. High yield, as you see there, down about 11%. The global markets, generally down in the high teens. So the U.S. and Japan down 18%. China never dropped as much, interestingly, as everybody else. They're only down 10%. Europe, a lot worse. Of course, Italy has been the epicenter of the problems there. They're down about 25%. It's been a lousy 3 months. You do not see this very often. 3 months in a row, the first 3 months, all down. January, February, March. Now, that March number will change a little bit, but you get the point. It doesn't happen. And in fact, since the modern S&P came in 1957, there's only been 5 times that's actually happened where the first 3 months of the year are all down. The last time that happened was in 2008, another year we'd rather forget about. And of those 5 years, 4 of the 5 ended down. The S&P ended down about 12%. And thanks to my friends over at Data Trek who do all of this number crunching for us. It's very helpful. So you can see 4 of the 5 years down about 12%. So what happens next? So there seems to be 2 camps that are floating around out there. As for down April, well, that's only happened twice. In 73 and 74, we've had January, February, March, and April down. So there's 2 camps right now trying to battle out about April. One is the shallow pullback rally camp. So you get a shallow pullback in the next few weeks and then rally on hopes that the total numbers are going to peak. Then you get the other camp that say we're going to test the lows and we're going to go down. If you're wondering what those lows are, February 23rd was 2191 on the S&P 500. So 2 different camps here. Rally back from in the middle of the week, month, and then test the low camp at the end of April.